Well, a rising rate environment does create some challenges for an income-oriented portfolio. We do manage our managed income strategy, which is designed to focus on income-producing assets and create the largest amount of consistent, reliable income that we can for our clients. Now, when we're managing those portfolios, we have to be aware of the rising rate environment. And so what we have done in those portfolios recently is make sure that we're invested in assets that are a little bit more insulated from rising interest rates. And what we've been doing there is using more floating rate type of bonds, and then looking for alternative ways to diversify that more conservative income. We've used things like master limited partnerships, been using a little bit more preferred stocks, and also focused on high yield bonds. And in the high yield space, really tried to focus on more shorter term duration type of instruments, such as 0 to 5 year maturity high yield bonds. Well, active diversification really is something we're looking at in conjunction with the bond allocations in the portfolio. And what we're looking for is ways that we can get conservative exposure for portfolios without relying solely on bonds. So active diversification is really about creating a lower risk piece of the portfolio that can have a low to negative correlation with equities, but yet still have reasonable price appreciation potential going forward. And so what we've done is in the bond space, we've looked towards more floating rate and shorter duration type of bonds, and then tried to diversify away from bonds towards other low correlation assets like commodities or currencies, or in some cases using just inverse equity positions or shorting equities to offset some of the long positions. Well, those are certainly areas that we're looking at more heavily this year. Especially technology and energy really fit in with our innovation theme. There's been a lot of advancements and research and development done in these areas the last couple years. And the valuations in technology and energy really lend themselves to buying opportunities. So we've been increasing our weights to those areas this year. And then commodities have also been a place that we've been increasing our exposure most recently. We've seen prices come back down in 2013 to a point where they look more attractive and more reasonable, given the opportunity for global growth across the world. As emerging markets and other international areas continue to move forward and improve, commodities are just going to increase in price.